Today, I'm going to reveal my top stock pick for November 2025, a stock with more than 60% potential upside. I'm ATP, and let's get started. Firstly, I want to thank XTB for supporting this video. XTB offers 0% commission on both real stocks and ETFs, with a minimum transaction value of just €10. These conditions apply to monthly volumes up to €100,000, and above that, there is just a 0.2% commission. If you are new to the platform and want help getting started, check out the full step-by-step tutorial linked in the description. And here's the best part: if you open an account using the code ATP, I will give you not 1 month, but 1 year of free access to our premium investing group, where I share my full portfolio, trade alerts, ETF strategies, and much more. You don't even need to deposit any money. Just sign up, send us a screenshot, and we'll activate your access immediately. Now let's start with a quick update on my portfolio. This month I decided to close a few positions. Firstly, I sold my Tesla stock, which I had bought back in 2024 for around $180. I sold it at $435, securing a 142% profit. And then I also closed my half share of TMO, acquired at 413% in May 2025 after this big drop, which I talked about on that month's video. This month I sold it at $536, adding another 30% in capital gains, which is pretty decent considering I only had this stock for 6 months. All of these sales were made because the fair value I had calculated for each stock has already been reached. And of course, all these trades and updates were shared in real time with our premium members, so they could also take advantage of these gains. Right now, even after closing those positions, the portfolio is sitting on around €2,700 in unrealized profits. Now, looking at the broader market, the S&P 500 has finally shown some signs of cooling down after months of strong bullish momentum. Since reaching its all-time high around the 6,700 level, the index has pulled back by roughly 3%, which is a healthy and expected correction. As I said in last month's video, prices are getting extremely high and the market needed some time to breathe. So this short-term correction doesn't necessarily signal weakness, it's just the market taking a break after a long rally. And so that's why it's still very important to keep an eye on which stocks we might want to sell, locking in profits when valuations get too stretched, but also on where we can still find good opportunities to buy, especially quality companies trading below their fair value. Now, before we talk about the top stock for this month, I want to take a moment to highlight one idea from our amazing community, in this case from Bill, who asked if we could make an analysis of the stock Barclays. Barclays is a London multinational bank operating across retail, corporate and investment banking and payments. By market cap, it currently sits roughly around the top 309 worldwide, showing its global weight. Looking at the TradingView daily chart, from its early history, the stock showed solid upward momentum, holding near the 600 period SMMA and recovering quickly after pullbacks, like on the dot-com crash. However, the 2008 global financial crisis was a different story. The stock experienced a massive drawdown of 95% and then spent years in a downtrend. Since the COVID-19 sell-off in 2020, price action improved. The stock rebuilt a rising structure and is now trading above the 600 SMMA again. So, in my view, Barclays chart history isn't as consistently stable as I prefer. As you know from my past videos, I like to invest in stocks that maintain long-term uptrends even through major crises. So, given Barclays' prolonged post-2008 weakness, I would personally wait to see another year of behavior, especially how it handles pullbacks, before considering an entry. Regarding fundamentals, using my 10 model framework, the average fair value is about $20 per share. And so, with the stock already trading around that price, the margin of safety is thin. So for me, this isn't a buy right now. If you have got more stocks you want me to review, drop them in the comments or in my free Discord community. I read everything and often feature the best ideas. And so, for this month's top pick, I'm sticking with Fiserv, the same stock we bought in October, because the setup just got even better. Since last month, Fiserv saw an additional pullback of around 12%. But fundamentally, nothing has changed, and my average fair value remains around $196 per share. Last month, we bought one share at $134, and today we can add another one around $117, which lowers our average cost and improves the potential upside. From 117 to 196, we are looking at roughly 67% potential upside. If you want to see the full technical and fundamental explanations, go watch last month's episode. Now let's head over to Xstation 5 and buy another Fiserv share. After logging into your Xstation 5 account, go to the Market Watch section. In the search bar, type FI and be sure to select the stock version, not the CFD. Once you have selected it, click the chart icon to open the real-time chart and review the current price. Now, right-click on the chart and select New Order. In the order window, type in the number of shares you want to buy. In my case, I'm going to buy one share. Once the quantity is set, click the green buy button, confirm your order, and that's it. If you enjoyed this breakdown, don't forget to like and subscribe to support the channel. And remember, if you want one full year of free access to my premium investing group, all you need to do is open an account with XTB using the code ATP. Thanks for watching, and as always, happy investing. Bye bye.